Hey guys, welcome to the first episode of the Bizzin app training sessions. I'm your host, Desley van Wyk, founder of Van Wyk Consultants and Accountants and the Bizzin app. Super excited to be here with you today, and jumping straight into it is choosing the right legal structures for your business. And there's multiple options why choosing the right structure is important for your business, starting from financial aspect all the way to risk and then just to sustainability at the end of the day. So why you have the different choices is your different risk factors. So where do you as the owner in the business takes risk in terms of the legal structure, your different tax implications. I think that's one aspect that a lot of you are excited about and want to hear more about, is just choosing the right tax structure for your business. Then your different compliance implications since 2023, where grey listing became a reality for South Africa. There's so much compliance going into it, and everyone getting frustrated with FICA and having proof of address and just having all those paperwork ready just to apply for a simple loan takes so much time out of your daily operations in a business. So that's also something we need to take into consideration. And then of course your different opportunities from investors and how they look at your legal structure and for them to be safeguarded in terms of that. So just starting at some of the different legal entities that we will be covering in this series is our sole proprietorship, which we are going to cover in this specific episode as well. Then going forward, closed corporations, our private companies, trusts, incorporated, non-profit companies and partnerships. And there are a couple of other legal structures that we can touch on that I'm not necessarily going to touch on here. But if you do feel like you want to hear more about it, like a cooperative, please just reach out to me and then I can do a training session on that as well. So jumping into sole proprietorship and the definition of a sole proprietor is the individual owns the business in their personal capacity. So essentially, you as the individual have the business in your personal capacity. So you essentially become the business. So just immediately from that, you can hear that there's quite a lot of risk involved to that, because there's no separation between the individual and you as the business. So say for instance, you go and you have a spaza shop and you're going to sell cookies and you're going to sell some Simba chips and everything, and you start selling it through your personal capacity. It's essentially you as the individual receiving that money for the Simba chips and receiving the money of the packet of cookies that you are selling. And so what I want to do here is touch on the explanation that SARS is giving for sole proprietorship. And so SARS, obviously our South African Revenue Service, the institution that takes your tax money. So it's important to know how they see and how they define it for you to plan properly in your business. So from SARS, a sole proprietorship is a business that is owned and operated by a natural person, which is the individual. This is the simplest form of business entity. The sole proprietorship is not a legal entity. The business has no existence separate from the owner, who is called the proprietor. So immediately you can see as well that SARS is taxing you in your personal capacity. So whatever profit is being made in that business gets taxed in your individual capacity as well, because there's no separation on the legal entity because you are the business. So going on, then the owner must include the income from such business in his or her own income tax return and is responsible for the payment of the taxes thereon. A sole proprietorship can operate under the name of its owner or can do business under a fictitious name. The fictitious name is simply a trade name. It does not create a legal entity separate from the sole proprietor owner. Only the proprietor has the authority to make decisions of the business. Because it's the individual, you are the business. The proprietor assumes the risk of the business to the extent of all of his or her assets, whether used in business or not. And I think that's a thorough explanation of what a sole proprietor is. And SARS has done a great job in just explaining that to us as a business owner to understand the implications, the risk factors, and the tax implications in terms of that. So if we go to some of the key characteristics of a sole proprietor, you as a business owner has full control and decision-making power, simply because You as one individual are making the decision. So unless you have multiple personalities, I'm pretty sure that you will be the only one making that decision. Right, it's not a separate legal entity. So once again, I'm going to reiterate that you are the business. So it's not like a company or a closed corporation where the legal entity is separate from the individual. The income tax is in the owner's personal name. So whatever the profit is that the sole proprietor is making, whatever profit it is that your spaza shop is making, that profit is essentially taxed as a salary in your personal capacity. So it will vary, your tax rates will vary depending on the profit that you are making. Then it has a very simple setup because there's no CIPC registrations, there's no CIPC costs involved with that. It's just purely every year you summarize all of your income and expenses, you create an income statement and you submit that with your personal individual taxes. And then it can trade under your own name or a trading name. So you can have Daisy van Wyk trading as ABC Properties or whatever it might be, or Daisy van Wyk trading as the Bizzin app. And so the Bizzin app then do not become a registered name, but just purely a trading name, but still it is in my personal capacity then, as an example. So some of the advantages of a sole proprietor: it's easy and inexpensive to start. The owner keeps all of the profit, so there's no dividends distribution that needs to take place or a bonus check that you pay. All the profit that's generated inside of the business entity becomes your money. It's simple compliance and tax filing. Like I mentioned, you don't have any CIPC returns, you don't have beneficial ownership, you don't have annual returns that you need to fill in, and your tax filing is a simple individual tax return. However, I do want to mention something there with your individual tax filing. SARS does these days trigger sole proprietorships quite a lot for verification. So you make sure you do have your income and your expenses quite detailed and summarized, because they will probably ask for that income statement. And then there's flexible decision making, because as you as a business owner, as your business grows, you as a business owner can make a decision on the spot. You don't have to call a board meeting and inform directors that the meeting is going to take place in 2 weeks' time. You can make a decision on the spot, which is sometimes a bad thing for people that makes decisions on a hasty basis, but for other people it's quite a good aspect just to be able to make that decision immediately. So some of the disadvantages: it's unlimited liability, meaning all your personal assets are at risk. So if you have your house in your personal capacity and your car, and now you decide to create your own accounting practice, for instance, in your personal capacity, and you mess up in an accounting practice and somebody keeps you liable for something, your personal assets become at risk as well, because you are the business. So it's very important to make sure when you do trade as a sole proprietor that you keep your risk as low as possible. It's a little bit harder to raise capital because investors doesn't necessarily want to invest money in that individual, because there's no legal entity and no sustainability going into it. So they are unsure what is going to happen with their money as soon as you as a business owner falls away. It has a limited lifespan, because if the business ends if the owner falls away, simply because you are the business. If you pass away, the business stops immediately. And then it's a less formal image for bigger clients. If bigger clients wants to use you for a certain project, or they want to use your services, they might seem maybe you are not able to handle the workload because you are only one person. So it becomes a disadvantage as a sole proprietor. Okay, just in terms of a legal compliance, and I think this is very important. If you are a sole proprietor, you still have legal obligations. So a lot of people feel like because they're a sole proprietor, it's an easy structure, they can just immediately start with business, that there's no legal obligations, they don't submit their tax returns, they don't do anything about that. Guys, it's very important to know that there is still legal compliance. You must register for personal income tax, point number 1. You must register for provisional tax, point number 2. And if you employ people as a sole proprietor, you must, according to law, employ those people, put them on UIF, deduct pay as you earn wherever necessary if those employees are receiving such an amount where they need to pay as you earn, and possibly even register for STL if your salaries do go over 500,000 Rand in a year's time. So that is very important. The one thing that nobody loves, VAT. Yes. So if you do earn more than R1 million in a 12-month cycle, you must still register for VAT even if you are just a sole proprietor. And then your accounting records must be up to date. And I just want to reiterate that, so important, because SARS is going to ask for that income statement. Please keep your accounting records up to date. So speak to your accountant and your tax practitioner to make sure your things are up to date. And then your COIDA registration, if you employ one or more people, you must register for COIDA, which is your workman's compensation if anybody gets hurt on the job that they can claim through the Department of Labor. So the sole proprietor, for who is it the best? A freelancer or consultant that's just doing it as a side hustle. So it's not going to become a formal thing for them. It's just earning a little bit more or extra income. A low risk, small scale operation. You don't want to build an empire as a sole proprietor. There's just too much risk involved, too much tax implications involved with that. Or if you simply just want to test a business idea, if you as an entrepreneur feel like you maybe want to start buying and selling shoes, for instance, and you want to see how it's going, you want to see if there's a market, just quickly do it for a month or two as a sole proprietor. But if you see it's getting off the ground and there's a market for it, then I would recommend just registering a private company, which we will touch in this episodes to come as well. So just quickly, a key takeaway: a sole proprietor is perfect for starting small, but as your business and your risk grow, your structure should evolve too. Guys, thank you so much for joining this episode. I hope that you have learned a little bit about how a sole proprietorship legal structure works, and it's important to know your risk. It's important to know the tax implication so that you can make the right decision. So stay tuned for our second episode when we are touching on closed corporations.